we showed Texas Instruments shares falling in after-hours trade, even though the numbers I gave were better than expected. So is this just not high enough for investors' liking?
Look, we're coming off a year where the SOX has gained 60+%. Intel at 30+% is a laggard in that. AMD's gained 150+%. So from an expectation perspective, we're pretty high. Remember that TI is highly exposed to autos, industrials. On a relative basis, this is not a volatile semiconductor revenue company. This is more steady as she goes. And we seem to have turned the corner from a revenue perspective.
For Texas Instruments or
For
chips?
Texas Instruments. And if you look at auto SARs, we think that auto SARs will be flat to better than 0% this year. So that's good for TI. Industrials, we seem to have a China-U.S. trade deal, phase 1, phase 1.5, whatever you want to call it, on a relative basis, that's positive for TI. So all of those should have TI sales sort of bottom and go up from here on out.
Anand, we've been having you on every quarter to talk about chips for years now. And a point that you made a while ago is that, we used to think of chips as this very cyclical business, boom bust cycles, inventory accumulation, and that what we've seen in recent years, excuse me, is this real secular shift, or just more and more chips and more things. When you look at results like Texas Instruments, which you described as being broad-based, is there any evidence of that slowing down? That meaningful shift in more chips and everything?
That's a great point you make. Semiconductors are the new industrials. They're the building blocks of
That's a great line.
This generation and the generation beyond. And from a building block technology, we need to have diversity. We need to have semiconductors pretty much everywhere. And you're seeing that secular strength play through. Now, there's going to be some volatility, but cycles of dramatic expansion and dramatic retrenchment, I think those are behind us. We're starting to see shallower cycles, and we're seeing quicker inventory corrections. The supply chain has become a little bit more efficient. Actually, it's become very efficient. So I think that volatility has been taken out. So you're seeing a lot of investors saying, okay, this is a broad play for me. This goes everywhere. This is a GDP plus 1 or 2% grower from a top line perspective, and margins are expanding because they're making themselves more efficient. So when you look at it that way, TI is a great way to play the broader economy.
All right, what does this mean for a company like Intel, which will be reporting tomorrow?
So Intel is a lot more narrow in its focus: PCs, servers, data center, a little bit of memory in there, less handsets now. So it's going to be more focused. And Intel has some very specific challenges from an execution perspective relative to AMD, which has been gaining share and executing beyond belief from PCs and servers. So I want to see some of those challenges abate if Intel wants to hold its own.